Niambie kama iko sawa. Kabisa in the voice? Is it clear? Hi guys, hope mko poa. Nimepotea for the longest time, but I'm back. So, I wanted to fix this, but I really need to see video. Bro, DK? I want to see venye. Hata nisikie nione phone yako. Nataka kuona chenye kiko kwa screen zenyu. So it's that here. Okay. Now the issue is I can't see how many people have joined, so I have to join with another phone so that I can reply even to messages to all those text. The text na maswali. Mtu yote kuna swali na anataka nikave kitu nataka muongezeke, that's why I'm taking a bit of some time. Nataka muongezeke. This number, please, is it for tuko wasi wangapi? Let me see. Tuko wasi, oh, okay, sawa. So, I needed to add, sound is not clear. Saizi mnanisikia? Tuko wasi 18. I need to share this live. And try and copy the link. So, I wanted the video size kuange hivi because this one is a bit clear and naweza somesha vitu mingi nayo. So, so let me 1 minute. So, nataka tufanye analysis. We're going to do analysis of Forex and then I'm going to discuss a bit of some things. Nimekuwa too lazy, sijakuwa nikiweza update a lot of the Forex somehow, which I should have. And yeah, so watu wangapi? Nione kama nitaanza sasa. This one is not going on. Bado watu wanaongezeka. A lot of echo on your side. Oh my. Right now. So I think it's a bit clear on my side. Clear. So, umepotea sana. I'm back. I'm gonna be doing live videos. I want to see if I'll be doing live videos every morning. Every morning at 7. Tunafanya analysis every asubuhi at 7. That's what I'm thinking about. I haven't yet decided. And so that we can be having time ya kufanya a lot of learning, patterns na hizo zingine. And then I get time bado ya kufanyanga analysis. So I'm thinking of doing analysis asubuhi. Jioni we look at a bit of analysis na a bit of analysis bado and tunasoma like patterns and everything. Hope my voice is okay right now. So nimeona tumefika 60. I need a bit of more of a number. So I hope my screen is very clear. You can see it's very, very clear. And I think I've improved on the live video. I think this is what people wanted. Instead of mimi kushikanga screen. So I want us to start. I think the number is good. 60 is okay. I don't want to waste much time, time. So we're gonna do analysis first, analysis ya Euro USD. No, before we go to Euro USD, before you trade any dollar pair yote iko na USD hapa. Before you trade any pair iko na USD, kuna kitu inaitwa USD index. Now USD index, this one, you show oh my So I gave it today kwa group. Before you trade any USD pair, USD index ni yenyewe huonyeshana strength ya USD ya dollar. USD index ni yenyewe huonyeshana strength ya dollar. Hii USD index, this chart, go look for something called USD index. Ni yenyewe huonyeshana power ya dollar. Ikipanda juu, USD index ikipanda juu, kumaanisha any pair against the dollar itaanguka. You can see all pairs against the dollar. Aud USD imeanguka, pound USD imeanguka, euro USD. Let's look for day time frame. Let me put it vizuri, imekuwa ikianguka. So because why? USD index huonyeshana power ya dollar. If the USD index is showing a buy, any pair against the dollar is going to fall. If it is selling, if the USD index starts selling, ni kumaanisha the dollar is weak. That is a very key note mtu kujua. That's why unaona it will still continue going up, meaning any pair against the dollar will continue to drop. Hii kwanza iko na bearish flag. New Zealand USD will continue to fall. Audi already, this one it has broken. This is a bearish flag. I'm going to explain all that. It shows more of a sell. And pound USD still shows a lot of sell hapa chini. Euro USD still shows a sell. Now, and USD index shows a very perfect buy. Kwanza wali break up and kumaanisha this market is supposed to go up, and it's supposed to go up in distance. By the way, let me measure this distance. As much as it has a distance for the double bottom here, itarudi iende juu. So nani tuanzie kufanya analysis kwanza. So we're gonna start with the first one. Before we do Euro USD, Pound USD, and Aud USD, let's first check the analysis ya USD index from beginning to the end. So inaka hivyo. So we take we start any analysis inafaa ianzie from monthly. I repeat, any analysis unafanya ya forex ama ya volatility, you should start monthly. It's very very important kwa sababu inakuonyesha the bigger picture at the market. Now, the first thing you start off with is a support. We're going to start with the support and the resistance. And another place of interest we should have a line ni hapa penye market imekuja ika consolidate. This is a position of interest because you have how many candlesticks in that position zinashindwa kupita side ya chini. 1 2 3 4 5. Yes, so tukuja tuweke line hapo. So anything to draw on monthly, I don't think I have anything to draw monthly. And note here, kwa hii market hapa hivi chini itienda double bottom. That's something to note, although I don't think it's really necessary at the moment because ishatumika. So we go tukitoka monthly, you go to weekly, W1. Okay, so we push the market to the center. Now, what can you note hapa chini? Hapa chini market yetu iko na double bottom. Market yetu iko na kitu inaitwa double bottom. Tumetoka side ya juu, market yetu ikafika hapa, ama watu wanazitanga W ama mnazitanga aje, inaitwa double bottom. So market yetu imekuja ikafika hapa, ikashindwa kubreak, ikarudi juu. Hapa katikati tunapaitanga neckline. Panaitangwa neckline. Penye market ilifika ikashindwa kubreak, that position we usually call it a neckline. Tumetoka side ya juu, market yetu ikashindwa kubreak hii level. Hii level ni 100.62. That is the level market ilishindwa kubreak. Yes, ikakuja ikafika hadi 105.85. Ikafika hadi hapo, ikashindwa kubreak, ikashindwa kurudi juu, ikarudi chini. So when you have a double bottom, what usually happen? Our first target ya hii market around hapa around hapa na hapa, our first TP ama TP yoyote ya double bottom should be at the neckline. You're together up to there. The first TP kutoka hapa, take profit, when you're due, when you take profit should be here. Because when you have a double bottom, the first TP can be there. Because sababu market can get up to there. Ishindwe kubreak neckline, yeah? Ishindwe kubreak neckline na ishuke. Ikose kwenda side ya juu na ishuke. Now what do you call this? Na ishuke ikuje hivi side. Now what do you call this? When it forms something like this, ifike kwa neckline, ifike hapa, ishindwe kushuka, kubreak hiyo level, ishuke chini. Chances itaenda ikiendanga chini, and this one it will be treated hivi. It will be treated like a flag. Bearish flag. We measure it, market itaenda ikienda hivyo. Ikishindwa kubreak neckline. Are we together? Ikishindwa kubreak hii position, it can go back and drop kabisa, and it will be treated next like a neckline. Together up to there? Now, so because it's coming up to here, it means any pair against the dollar will be dropping like crazy. And pair kama USD GPY zitakuwa zinashoot juu. USD GPY is zenye ziko na dola, utapata USD card inapanda. At the moment utapata USD GPY inapanda. Which other one? Zinapanda. USD GPY was the other pairs. I'm forgetting. Utapata kama hata hii nilipata Euro New Zealand. Okay, fine. Ni venye tu New Zealand na nini ziko weak. Back to what I was saying kidogo before I forget. So utapata pair yote against the dollar, zote hizi, they will be dropping very fast. Kwa sababu USD index inaonyeshana buy. So up to them. Now we go today. In case, let's just, because we work with probability in Forexes, we work with probability. Let's assume market yetu imekuja ika break the neckline. Let's assume market yetu imekuja ika break the neckline. What is going to happen is the market is going to do a retest, and then market yetu itaendelea kwenda juu. Na ikifanya hivyo ni kumaanisha pairs kama Euro USD au USD, Pound USD will be having a sell for a very long time, because I've told you USD index dictate on how the dollars behave. The dollar USD index ikibuy, pair yote iko against the dollar inaanguka. It's as simple as that. USD index, you should always have this chart before trading any pair of Forex. You should always know the direction of USD index. If you don't know the direction of your USD index, you unacheza na moto. Because how can you trade the dollar if you don't know how USD index ita behave? Tuko pamoja hadi hapo? So in case ikuja hadi hapa wa break, wait for them to do a retest, or you can enter after wame break. Kubreak ni market ifunge candlestick hapa juu. Nitaelezea hiyo in a few. They do a retest and then the market will go up. So we are on weekly. Weekly imetuonyesha iko na double bottom. This is the importance of starting with bigger time frame. Yes. So we go to day time frame, and then on day time frame we still have the double bottom. Yes, we still have the double bottom here. Let me actually position vizuri. We still have the double bottom here, you see? So our neckline is our target. I've said the neckline is our target. So ile day in market itakuja. Now wait, yes, I need to reduce the size of the candlestick kidogo. So ile time hii market itapanda hadi hapa, i-break hii level. Tumesema itaenda iendelee kwenda juu, going back kwenye double bottom hili, enda. Wakifika hapa wanaweza shindwa kubreak na market irudi chini. So you have to really wait and see how the market reacts when it gets here. Either it decide to go up. If it decide to go up, meaning Euro USD, AUD USD, Pound USD will continue to drop. If it breaks the neckline, it decide to continue going up. If it's not able to break the neckline and it goes back down, it means AUD USD, Pound USD, and Euro USD will go back to buy. But For now, USD index is indicating a buy, meaning all these pair against the dollar, against the dollar are going to drop. That's it for now. Now, we go on. So, the market is supposed to come up to here. On the time frame, I really don't have anything to draw, but for me to have a confirmation, I had to have a confirmation around here. For me to confirm, kabisa, we are going up. So this is, I'm drawing a channel. I'm gonna teach on how to draw channels as we continue. So our market is forming on the upper side. Our market is forming on the upper side. So I'm going to draw my three dots on the lower side. I can't because they are the ones which dictate where this line, how this line will behave. The one with the one dot, it's the one which is going to dictate how the line this one with one dot, because you can this one dot can dictate where the three dots will be set. Yes, I really need to draw it perfectly. You shouldn't have any kind of mistake. Now you can see my lines I'm drawing below the wicks, kwa sababu watu wengine, you people just draw mchore line. You ask someone what is the purpose of that line, they can't tell you. They have to be accurate like this. 1, 2, and here you can see hakuna yenye imekata wick yoyote. They are perfectly touching. So, and then you bring it on the upper side like that. So what has happened here? Let me remove this. What has happened here? The market broke this level, meaning it has confirmed itaendelea kufanya nini? Kwenda juu. Confirm itaendelea kwenda nini? Kwenda juu. It has already confirmed. They can do a retest. I'm not so sure. They can do a retest, or it can just continue to go up. I want to go just stick with the metaphor. I'm using meta 5. I kind of like sometimes using meta 5. It's quite good. They have already broken the level. They even did a retest. So this market is supposed accurately to come back to here. So any trade you have against the dollar, make sure the dollar is on buy. USD is on buy against all the other pairs. Why? I've told you USD index dictates for the dollar. That's why you've seen it's going up very fast and nicely, and every pair against the dollar is selling. Let's continue. So that's it. To make an entry for this one, USD index, you can see even with 4 hours, they really, while you break, and they did even a retest. While you break, they did a retest. You can see it right here. So the market is supposed to continue going up. You can have an entry around here for the USD index. Yes, around above here. You see where the market here on the upper side, this one. You can already have a buy here for it. Okay. So USD index is the one which dictates for the USD, and I've told you it's on buy up to 105.85. That is the area it's going to. So let's go to the other pairs, and the first pair we're going to look at today is Euro USD. Yes. So that I can confirm this one, we have a double bottom. Remember, I've said we have a double bottom. Our target is the neckline. Double bottom inakuanga. I need to open something really quick, sorry. I need to open Zoom. I need to draw something. And there is where I can get a billboard. I can get a sign into Zoom. So I want to sign into Zoom. I want to get a billboard. Yes. So I want to log into Zoom. I want a billboard so that I can do whatever I want us to learn. And this is more fun than whatever I was doing. The other one, when I was teaching the one that I was really getting tired holding my phone and everything, and yet it wasn't this clear. So as it's open, so we wait for the market to come up to here, and then that's it. But I need to explain something about a double bottom before I proceed, because we are doing analysis and still learning. So it's very good if I elaborate a bit more on the double bottom part of it. Oh my. I really need to it open for me the Zoom. Oh yes. Uh, Share screen only. Um, oof. Okay, resend. Not a robot. They're telling me to verify my code. 1 minute. Um, but 1 minute. Let me get done. Yeah. And in the end, here code, I need to get a dashboard. A dashboard for me to draw whatever I'm supposed to draw. Uh, mm-hmm. Where is the email from Zoom? Yes, this one. Oh no, how was it? This one. It's 43419. Verify. So host a meeting, share screen only. Launch a meeting, 1 minute. I need to launch a meeting. So let's continue launch a meeting. Ish. We're taking forever with this one. So I'm gonna be doing Forex volatility, and if you want to learn something, right now in Ulizeni, I have all the time. I'm no longer doing any kind of VIP or anything. As Fuzi, I decided to focus so much on a lot of trading and training. I usually like learning a lot of things, and I'm gonna teach you a lot of things which I've learned, and they have really helped. So I'm gonna be doing classes as much as I can. I hope I will help so many people as much as I can. And can't a meeting. Hi. But because I'm streaming, oh, it has accepted. Oh my, I think it can accept. Okay, fine. No worries. I'll try and draw whatever I want to explain, yes? So a double bottom look like this. Ah, this is my laptop now in Konomalengo. And I can't see your comments. Oh my. Sijui kwa nini sioni comments zenyu zote. Not clear, echo. Bado ni kuna echo. By the way, that is size mwenyewe naona comments zenyu. I couldn't see any of the comments. Whiteboard. Nataka whiteboard. Is the sound okay? Kwa sababu I can't read all your comments, but I will try to read all of them. Like and share, by the way. Like and share this video, please. Like and share, it will be really helpful. So I really need to show about the double bottom. The double bottom usually looks like this. Yes, the double bottom. The market originated on the upper side. To get up to the support. This is a support. To get up to the support. To get up to the support. Right? This is the lower side, we call it the support. The lower side of the market is called the support. And then it goes up to a certain level. That one is upon the market to decide. It goes up to a certain level. Let's say up to there. And then there I usually draw a line. Goes up to there. Then goes back down to our support. But it doesn't break the support. Ku break the support ni kumaanisha hii market ishuke iende hivi. Nitaonyesha hiyo ni nini kwa sababu kuna kitu kingine bado market hutumia kama hivi alafu inaenda hivi. Inaitwa diversion. Descending. Yes, it's descending diversion. I'm going to teach on that, but not right now. Right now I'm talking about a double bottom. It's descending diversion. So it gets the support, it doesn't break the support. Nafika tu hapo, and then market goes back up. Now, this is how you trade a double bottom, yeah? If the market gets up to here, this one is called the neckline, hapa. This area. You see this area? This area market ilikuja ikafika hapa. It is usually called the neckline. And it's usually called the neckline. It's usually called the neckline. It's usually called the neckline. It's usually the first target when the market gets up to here and then it decides to sell. Now, usually trade this, the last one, this one. Kibahatika kama unaweza predict itaanguka back hapa better, but mostly, to be really sincere, what you usually trade as a trader, usually trade this one. When it gets to the double bottom, hapa penye huyu alikuwa akashindwa kupita, huyu akafika akashindwa kupita pia. Usually buy here. You buy, let me write it to some people. Usually buy here. Then your take profit should be at the neckline. Because I've said your TP should be here. Your TP should be here where the neckline is here. Your take profit should be there. You buy here, your take profit should be here. You wait for the market to decide the direction. If it breaks the upper side, if it does what? If it breaks the upper side, you wait for it to do a retest because it has to do a retest, and the market proceeds going up. Together to go back up to the position it originated from. Simple. But let me go back. If it breaks the neckline, the market kumaanisha candlestick ya maybe 4 hours, day ifungie side ya juu. Ita continue kwenda juu. But you have to check double bottom imeformwa na time frame gani. Kama imeformwa na time frame ya day, ama ni 4 hours. That one I'm gonna explain. I'm gonna go back and explain what I mean by time frame. Because time frame really dictates on the time frame that market is going to break. Hapa juu nayo. It really dictates. Because market yetu we don't have a double bottom na 4 hours. You're not supposed to trade na 4 hours breakout ya hapa. You're supposed to trade na day candlestick. Tuseme imeformwa na day on day candlestick on day time frame, you can see a neckline. But ukikuja On daytime frame you can see a double bottom, but ukikuja kwa 4 hours you can't see the double bottom. You're not supposed to trade with 4 hours. You're supposed to wait for the candlestick ya day ifunge. Like you wait for the whole day to end, like today. If the candlestick closes above, tomorrow you can place a trade. But if the candlestick of daytime frame doesn't close above, don't you trade it. Because this is what the market does. Ifike hapa ishindwe kubreak, the market usually go back down. When it goes back down, it's gonna form something called a bearish flag. It's gonna go, ifike hapa, it breaks side ya chini, it's gonna go back here. If it continue to go back there, chances juu imetoka side ya juu, it can form something called a bearish flag. Na ishuke hivyo. So you really have to wait for the market to break the neckline. It's very, very important. It's a key point. So you buy from here, take profit up to this level. Okay? Take profit up to that level. Buy here, take profit up to that level. That's why we have this. We have a double bottom here. This level and this level. Our target, we have said, it's at the neckline. This is the neckline. Let me do it very nicely so some of you can see. But it can be a bit clear. We have a double bottom. This is a double bottom. This one and this one. Because this one is they are double bottom because here these are wicks. See body, haija break na body. Ni wicks ziko saidia chini. Wicks si breakout kwa Forex. That's something I'm gonna explain later. Wicks si breakout kwa Forex. We have a double bottom at this level. So what is going to happen? The market has to go up to the neckline. Lazima. It's a must. It's constitutional. It's 100%. It has to go to the neckline. So when they get to the neckline, we wait for the market to decide on the direction the market will take. Either it goes back down and form a bearish flag. Your work as a trader is to wait to see how the market breaks, or it breaks the upper side and moves up kabisa, and moves back up kabisa up to here. So your work as a trader is to wait and see how the market behaves when it gets to the neckline. Now we can see a double bottom still with daytime frame. Let me go to 4 hours. 4 hours we didn't have a double bottom. I don't know if you're gonna see what I mean. Let me try and explain. I'm gonna do this. You see this level, it's above. I need these candlesticks. They are very tiny. No. I don't want this one here. You can see here at our support, the body is covered. It's on the upper side. I need a bigger candlesticks. Okay. I know this one will sound a bit crazy to some people, but I'll explain. I'll try and explain. I'll try as much as I can and explain. I need to remove these videos. Zoom zinanisumbua. If you look at 12 hours, market yetu imebreak hii side ya chini. Now, what I mean, you have to know the time frame which has formed the double bottom. Now, if you go to, we start with day. Let me start with day. If you go to day on the lower side, hakuna body may break support. If I touch here, this is the key area you should first touch, so that you can know if this one adhered to this, because this one is the one which dictates. This the first double bottom is the one which dictates where the second double bottom should reach. So your line should be where you put your support. This one is the one which should dictate. So it got up to here, and I've touched where the wick is. And you can see the market really did obey. In which manner? We do not have any body on the lower side. We have only a wick. And I said a wick is not a breakout in Forex. A wick is not a breakout in Forex. But if we go to 12 hours, let's go to 12 hours so that you can understand. 12 hours, there's something wrong. There's something which is not right. On our lower side, let me push it a bit up, you can see we have a body here on the lower side, meaning on 12 hours, this is not a double bottom. This is not a double bottom. We do not have a double bottom with 12 hours. When we go to 8 hours, we still have the bodies on the lower side. This is not a double bottom. Here and here, that is not a double bottom. So meaning 12 hours, we do not have a double bottom. So we cannot use that time frame as a breakout here. We go back to 6 hours. We still have this body here. Go to 4 hours, still have body. But when you come to day, we do not have any body here. So what is the key thing is to note is, regardless if the market comes and breaks here with 4 hours. Now, I mean 4 hours. I mean, if the market goes up with 4 hours and breaks, don't trade it. It can be a fake breakout. You have to wait for the market to break day time frame. Day time frame, because double bottom yetu, it's formed with day time frame. It's not formed with 4 hours. Now, those are the retro things which confuse a lot of traders. You have to know a pattern imeformiwa na time frame gani. Now, this one I've said, it's formed by day time frame. You can see it very clearly, perfectly with day time frame. But when you come to 12 hours, we have some bodies here. So you can use 12 hours candlestick as a breakout here. This one you have to wait for a whole day to end. And if a candlestick ya day time frame ikifungia side ya juu, you can officially take a buy. But what is going to happen when you use 12 hours and 8 hours and 6 hours? If, let's say 6 hours candlestick breaks and remain on the upper side, what is going to happen is it can give you a fake breakout, because that is not the template which has formed the double bottom. Now, that is a bit deep. I hope I will explain more. I'll teach more on it. Now, we continue. This is a double bottom. I've said we are going up to here. So, any pair against the dollar, we expect it to sell. So, we start with Euro USD. Our analysis, we're going to start with Euro USD. We're going to start from monthly. The first thing I said we look for are support. Analysis are usually easy as ABCD za Forex. Hakunanga rocket science. Analysis ni chenye unaona kwa screen. We're going to start with support and resistance, and another one around there. Is it really necessary? Nah, don't think I'm gonna use it because of this area. Let me bring the support around there. Then I'm gonna take a trend line from the highest position we have for this market and to the second. Now, usikuje, don't take, this is our highest position. I know people will ask me, why didn't you not put this is our second? We do not mean by way tunamaanishanga highest to our second highest. If I place it there, if I place it here, it's gonna break all this. So it's not making any sense, you know. And when I put it on this, even the second one, sorry, when I put it to the second one, it's not still making a lot of sense because I said in anything. So the highest position I have at the moment is the upper side, and it's here and here. Look at, if you want, like maybe I usually like using the trend lines. I can use a trend line. I will place it. The market is forming the upper side. I can do something like this instead of using a trend line. And watch how accurate my lines are when it comes to drawing them qua weeks. Then I'm going to bring it on the upper side, and you can see. You see, it has really dictated for that line. It has really dictated for the three dots. These three dots really dictate for this one, because in easy press here, here, and here, and here. I've touched 1, 2, 3. Bring it on the upper side. You can see how accurate it is. Yes? So that is a channel. You can use a channel, or you can check a trend line from the highest or to the next before you learn how to do the channels. We go to weekly time frame. Let me turn the market to the center. What you have on weekly time frame, I'll put a line here. This one, I'll place this one. So here what we have on weekly, this market has a double top. You can see a double top. Double top is the opposite of a double bottom. So rule number one, as you know, straightforward. You see a double top or a double bottom, the first target is the neckline. Neckline is here. Because this is a double top, this market has to drop up to the neckline. It has to. This is a double top you have here on top, yes? Now we go to anything, yes, we have something to draw also. We can take a line from the lowest, of the market to our second. Our lowest here and here. So that is on our weekly. And then we go to that is on weekly. We take a line from the lowest position to a second. You can see the line was broken. The market did break the trend line, meaning it's an official sell. It's a clean official sell. Now I need to make it perfect. It should not cut any here. You see, like this one, no, it's supposed to be below it. It's supposed to be below that one. It's supposed to touch this one, it's supposed to touch that one. And like you can see, the market even did a retest. The market did what? Market did a retest. You touch here, make sure you don't cut the wicks or anything. Just be as accurate as fuck, yeah? Just be very, very accurate. So you touch here, and you can see the market really did break. And what next did they do? They broke the area and did a retest, meaning they have officialized the sale up to there. And the reason why I'm saying up to there, because on weekly, we have a double top, meaning you're going to the neckline. And when we come to there, we still have a double top at this area. You can see this too. Let me even mark that. Here, this position, these two, on top, we have a double top. We have a double top zone, or let me just use a line for anyone who wants to verify. We have a double top, a very unique small double top, meaning our market should go back up to the neckline. Here, the neckline is here, or you can take it, this is where the market should drop up to hammer. We are together up to there. I think we are good up to there. So we have agreed. Euro USD is going to drop. Why? First, the dollar index is going up, meaning any pair against the dollar is going to drop. 2, Euro USD has a double top with weekly time frame. With weekly time frame, it has a double top, meaning the first target it has to go to the neckline. And I told you that a must. That is 100%. Take it to the grave, take it to wherever. It's a must. The market has to go up to the neckline. It has to. Mark my words. And we're going to Euro USD will go up to electric take profit where the bodies are. My take profit will be where the bodies are for the weekly. Yeah? 1.05344. That is the area where the market should go up to. Now, on daytime frame, we have said we still have a double top. Our target is still the same. The market broke this area, did a retest. It's supposed to continue going down. For anyone who wants to take a entry, let's see. I like having entries with 4 hours. Yeah, even 4 hours they did a very good retest. I think even the position it is at the moment can be a very good selling position for anyone who wants to sell. For me, it's good. But the best entry should have been around here. Or around here. Or these are the things you usually do. Let's go to 4 hours. Sorry. Yes. No, I think it's already good to go. For anyone else who want to, yeah. It's really good to go for anyone who wants to sell it. They've already done a retest and the market has already broken the lower side of this one and this one. You can see with this candlestick. So this market is going to continue to drop. You can see it still have a double top with 4 hours. This is quite interesting. This is a double top even with 4 hours, meaning that market should drop out to here. Double top, I've said when they break the neckline, what the market does do. The neckline was here. You go up, this is the first top, let me zoom out. This is our first top neckline, our second double top neckline. They broke that level, did a retest. So we are going back to wherever it originated from, and it's here. So Euro USD should drop, and that's it. Okay. So we go on to the next one. We go to pound USD. Pound USD, easy as ABCD. We go to analysis nakwanga that easy. Monthly, we go to monthly time frame. This is the size of the candlestick. We go support. Resistance. First, support at our lower position. And then the next thing you do, you take a trend line from the highest position to the second. So, and then we go to weekly time frame. Like I share, okay. All those questions nitajibu in a few. Then you have you take a trend line from this was the last position you have. Go to weekly, this is the highest position you have. You take a trend line from the highest. The second, our highest is this one, our second is this one. You can notice the market did not break this level. Okay? Then we go to we take a trend line from the lowest position of the market. Lowest position of the market, and then like that. Please like and share the live video. So if you take from the lowest position, this is our second dip. It was around there. Then here go. There you can see while it break, did a retest. So this market is supposed to drop. Yes. The first target support which I'm seeing is here. This market should drop up to here. And just a double top with 12 hours. I saw it afterwards. Just a double top with 12 hours hapa hivi juu haka kadogo. Just a double top with 12 hours haka. Top ya kwanza, top ya pili. It's not usually ever that big that you're gonna find a double top which is so big. Just a double top here, meaning the market should go back to wherever it's originated from. And that's it. For you to get an entry, you see this area, it was consolidating this one, two, draw a line there. It's very good. See this one, this kind of consolidation here. They're very quite interesting. If you didn't get an entry here, in computer, you can take the next entry after the market has broken this area. Because it had quite some consolidation here. You can wait for them to break this zone. You can wait for them to break that zone. So that was form kaidensho na kadogo. No, they can do that. They can get up to that this area and do a head and shoulder. Let me show you. They can look at kitu kama don't joke with this market. Can do something like this. So it's very very good. You wait for it to break 1.235 235 23508. So we wait. I haven't said they're going to go up. I've said you wait for them to break this zone. They break 1.23508. They break that zone, they're gonna drop because they can do something like this. I know the market can play along around here and then drop completely. Okay? Hi. We go to Audi USD. Audi USD. I said we start monthly. Analysis nakuanga easy. I don't know how people complicate analysis of Forex. Start from monthly. Oh, and also I ask you how to make those entry. Like this one, you can wait for the 4 hours candlestick to break that level. The 4 hour candlestick to break that level so that you can make the entry. Yes? You wait for the 4 hours candlestick to, or the 12 hours, or the 4 hours mostly. Forex I usually trade with 4 hours. Mostly after every 4 hours I look for a trade to place. So you can wait for them to break here, na candlestick ya 4 hours, so that you can trade it. Yes, you wait for the 4 hours candlestick to break here. This supports. Move this. You wait for the 4 hour candlestick to break this support because nimekwambia these are the areas of interest. So you can't sell it at this position because it can go up and form a pattern. It can go up and form a what? It can go up and form a pattern called head and shoulder. Shoulder, all this is head and can do that. So for your own security and for your own good, for your capital and holding retracement, because you don't want to hold any retracement, wait for it to break this level so that you can sell it. But if you have a trade here, you can step out or you can still hold it and lock profit. Lock your profit if you have a trade around here. You can lock your profit so that if the market decides to retrace back up, you stay. Your trade is closed. Yes. And now we go to the next one. So we have said that when we wait for a sell, we have said it's gonna sell back to this position. Still have the double top also. It's gonna come back up to this area. But we have said you wait for it to break 1.23508. You wait for it to break that area. Sawa? Pamoja. So to chill or break up or just sell it up to hapa. That is a clean trade. Swing trade wenye wanataka ama wenye ushinda wakiscap. Mko mna scap sasa sell kwenda chini. So we go to the next one. The next one is Audi USD. Audi USD we start from monthly. Said analysis is usually very easy. We draw the support. We can notice mtu mrefu ashajua hii market ilikuwa na head and shoulder ama whatever it's going to form around hapa. So I'm gonna do support, I'm gonna do resistance around there. Then I'm gonna do a trend line from the highest position. I'm gonna leave the video here for people who want to train how to draw trend lines. From the highest position to a second market goes like that. That is on monthly. You have nothing else to draw on monthly. You go on weekly. Weekly inakaa hivyo. Our market. What do you have on this market? I can have a line from the lowest position of this market, a trend line to here, because it's very, very important. From the lowest to there. Anything I need to draw here? Yes, I need to draw something. Our market really consolidated along hapa. You can see this area, inside this area. Our market really did consolidate along hapa. Because I can see a lot of candlesticks. Non-weekly, that is a very big time frame. You see, 1, 2, 3, 4, 5. That's a lot of consolidation. Meaning, if it breaks on the lower side, you're gonna measure the size of the consolidation. You're gonna measure this. You're gonna measure this. This area. This is the area the market should go. Whoa! Wait a damn minute. Wow! It's getting up to the line. Okay. This is quite interesting. From the lowest to the second, and then you can see our trend line here. And if I measure the distance of our consolidation, call it distant X. Let me draw it here. Our market is originating from the upper side. Then it get to a consolidating area like this. This is a pattern tiers. So if it breaks, usually measure distant X. You measure from here top up to here down. That is the distance the market should go on the lower side when it breaks the lower side. Okay. That's the distance the market should go to. When it breaks the lower side, this is the pattern which our DSP is giving us right now. So I've said if the market originated from the upper side, consolidates on one position, consolidating kumaanisha haiendi juu, haiendi chini, it's not moving up, it's not going down, just consolidating, going zigzag in one area for quite some time, yes? That is what we call consolidation, and that pattern is usually called a bearish flag. Our market is originating from the upper side, consolidated on a zone, broke on the lower side. It's supposed to go on the lower side. If it originated from the upper side, then consolidated on one zone, yes, originated from the upper side, consolidated on one zone, it's supposed to continue going down. So I've said you measure distance x. This is distance x. This is what our DSD is giving us. Let me show you right now. Like this. Our market originated on the upper side, consolidated on one area. They have already, I can see they are breaking the area. They haven't, it's not yet confirmed. Just because the candlestick is below our support doesn't mean it has been confirmed. Because our candlestick is not yet closed. Closed ni kumaanisha they begin a new candlestick. This one remain like that one, the way it is, and they start a new candlestick. That is what we call a breakout. So we go to daytime frame. You can see our market was consolidating on that area, originated from the upper side. And something else very important I can see here. Our market has a double top. Meaning it should go back to wherever it originated from. It has a double top. Meaning because they broke the neckline was around here, you can see here. Let me show you. Here, we had a first top. The neckline is here. You can see the market really did obey. You can see it really closed the body below there. You see, our first top, our second, they broke. This is what we call breaking the neckline. They broke on there. On below it, the candlestick, the body is below. It is surpassed our neckline. The market did a retest. You can see they don't have any body here, only wicks, and we said wicks are not breakouts. So, and then continue to drop. Then consolidated at one zone. Now, this is the interesting part. If the market closes below here, if the market closes today below here, you just measure distance x, this one. You measure distance x. You measure distance x. That is the distance that market will drop on the lower side. This is the distance the market will go up to. So it has a very good entry, but wait for it to break with the day candlesticks. And wait for it to do a retest. Because I can see the market hasn't done a retest. It has broken, but it hasn't done a retest. Wait for the market to come back here to do a retest. Wait for it to come and do a retest there, and then say all this way through. Sell it all the way through. So that is our USD rates for that. So I think that I've covered whatever I wanted to cover. We're gonna see more tomorrow. Oh, and New Zealand USD. New Zealand USD, wait for it to break here. It's gonna drop completely. New Zealand USD. This one, this